All right, just let us know if you can see the charts, yes or no. All right, we're gonna get started here with the NQ. Juan, do you see the NQ? I'm gonna go really quick. If you notice, there is a no trades on. I will explain in detail later on. But yeah, I'm gonna. What is it? What is your target, please? Let me see if I can get a fill at the 97.25. Thank you. All right. They just broke outside of the no trade zone. Okay, perfect. Yeah, they're definitely not going just like the other day. Let me see if I can get this upward tick. So 81.50 you set and 74.75. All right. Yeah, they're not gonna give me the fill again. Target is gonna be 93.50. There it is. So I'm gonna wait back again. Darn it. Same thing. They were running away without pulling back. Okay, so that is a gone trade for me. Screw it. Okay. So basically the no trade zone on the NQ, it was a breakthrough the 97.25 level. We're gonna do the screenshot swans in a moment. Let's just start with the analysis for a moment. We tried because we tried to take a quick trade here, but I'm gonna cancel it for now. Let me do the analysis. That was a quick setup. But let's just stay out at this point. Okay. That was a quick one, the 4 points. Okay, so starting with the NQ. All right, the no trade zone represents the following region: a break above 18 even to 97.25, which is the one that they just took. It will mean that it will trigger the 93.50, 90 even, 81.50, 74.75, and 69.75. Obviously, you need to change the decimal point to the correct points. You know, the closest decimal number, right? So we'll do that in a moment. But basically, this is the no trade zone. In other words, as the market sustains itself within this range, we could see a highly probability of unbiased or market pushing against the main trend. In other words, if the market is approaching the bottom part of the no trade zone, right, which dies at the 97.25, we might encounter some buying pressure. That's exactly what happened here. Market went down and pushed up a little bit, and now they broke outside of it. Okay, the main trend that we should focus at this morning is sell setups only, going short on the NQ. What are the levels down? If the market sustained the main trend and we break through the 97.25, which we already did, it will hit 93.50, 90 even, possibly 81.50, 74.75, and 69.50. Okay, or 75 in this case. I like to round it up to the higher decimal point based on the instrument that we're trading. Our main focus for swing trading is a break of the prior day swing low. If that happens, which is this purple line, which represent a bigger time frame, multiple confirmation levels. Well, in other words, is a level that we're able to confirm 5 times using different modalities of analysis, right? And also happens to be an important layer where smart money it's looking for either buy or sell. We have no idea if they're buying or selling. What we know is there's a huge amount of floating orders right at the levels that we're able to confirm with multiple different layers of analysis that we turn them into purple. There's another one right here of the 63.35 even area. That's a huge influx of potential sellers stepping in at those areas, right? If you notice, there's a green box in different layers. Those are what we call power zones. Power zone means that within the range of those two price points, there is an influx of huge amount of floating order or transition points. If you're an OFA trader or order flow trader, that's basically transition points in the past, right? We combine all of those so we can have them visually in the future as the market moves on the way down, so we're not pretty much blinded by the fact of thinking that the market is going to continue on a free fall and all of a sudden the market start bouncing up and you end up wondering why is it that the market is bouncing up. Obviously the market moves in oscillations on the way down or move in oscillations on the wave up. Those turning points of the oscillations are labeled or identified visually for everybody in with these boxes and these lines. Does that make sense? Got it? Everybody's clear on that path, right? So the analysis today so far on the NQ is this morning. It's being focused on sell setups only so far this morning. Okay, the no trade zone is identified on this region, and if the market breaks to the upside, it will hit 30, 35 to 37.50, 43.50, 47.25, and 55, so on and so forth. Okay, can we take the snapshot? Thank you. All right, now let me zoom out a little bit so we can see a bigger picture. 30 minutes. Huge move to the downside. Let's just expand our analysis a little bit. And why do we think that the market will continue on a downward move? First of all, the first thing that I notice is a huge impulse move to the downside, that it's leaving behind this important high. This high, until it's being broken through, it's indicative of sustaining a bearish and sentiment, right? Until and unless the market reverse and break through that high. Since that hasn't happened, the main trend will sustain the exact same path from the huge impulse move that they left behind. And the biggest move so far of what we can see in the whole spectrum here is this huge downward move. In other words, the main trend is down. They took this low right there to the downside. The market pulled back with an ABC structure, double bottom or triple top formation, so to speak, on the overnight set for the overnight session and the last two sessions, indicating a very strong failure of taking the prior swing high. That's another indication of a very strong continuing downward move. Okay, that's what we've seen so far. All right, so the main trend is down. Price created a kind of an ABC structure. If we talked about Elliott wave patterns, I do not care if we're on the first, third, fifth, doesn't matter. What I know for a fact on Elliott wave patterns is that the impulse move, the biggest moves, are labeled as follows: 1, 3, and 5th, right? What I need to know is that every time that I identify a huge move on a chart, it's either 1, 3, or 5, and it's gonna be followed by a subsequent ABC pattern or corrective mode, and then we'll continue on a very strong impulse move, which could turn obviously into the next wave down. If that's the case, I immediately assess here a huge impulse move down. This could be either 1, 3, or 5. I do not care. What I know for a fact is after watching such a huge move down, what's coming after is an A, B, C corrective mode. That's all I care, which could be either 2 or 4. Got it? So if I'm sustaining a bearish tendency, the market is sustaining a really strong bearish outlook based on the price structure as well. Momentum is indicating to go short as well. The failure of the market not taking the prior high is bearish outlook as well. It's obvious that the most likely outcome is going to be to continue down. That's my take in here. So on the overnight session, then we move into, all right, fine, we know we're going down, focus on sell setups and so on and so forth. Then we narrow down our vision to a lower time frame, and then we go into the previous past information, identify the levels, identify the smart money tendency, right? And continue to the downside by breaking pretty much what we call the no trade zone. So we created kind of the area of a high probability of transition where the market is going to have a lot of whipsaw or inconsistency, which is coming from this kind of two bottoms right here on the previous swing low. So even though we're continuing down, I also must identify the following. The market will break this no trade zone, which is something that we calculate meticulously every single time. The market is going to continue down, is going to hit the 90 even as we speak in any moment. We wanted it to break, and I try to short close to the 97.25. It's going to come down towards the 90 even. I'm going to wait until that happens and possibly wait for a pullback and try to get in around that level. But you're going to see it happening before it reaches the 90 even. That's the next layer before even the 93.50 was hit. So market broke outside of the no trade zone. It hit the first layer here, second layer coming here, and third one is coming in here. These are the three that I'm most applicable of. We will encounter on these three layers a lot of possible pressure. Why? Go back and take a closer look. There is a huge influx of buyers stepping in around that 90 to 81.50. Okay, you can see it right here. The market pushing up every time that they reach or test those levels. So imagine if we eventually break that 81.50, that means that 74.75, 69.50, 61.75, 50 or 75, whichever you want to keep using. I like to use the higher decimal point. 46, 50 to 25. Those are potential levels where the market most likely will go. Here's another thing that I wanted to say. This is not an exact science. These are not specific numbers, although we calculate it by the tick. Don't be greedy in those terms. Just make sure that if we say 74, 75, and you're shorting this, guys, place your limits about, you know, half a point up, 1 tick above, 2 ticks above. It doesn't matter. Don't be specific, right? You just want to have an idea. Most likely with the market, most probably will hit and create kind of a reaction against the main trend. Okay, each subsequent level down or up represent a strong support on the upside, strong resistance. In other words, every time that we hit one of those, it's highly probable that the market will bounce back up from it. All right, be aware of it. Right, I'm just being very specific with you guys about that scenario. Okay, my take today, NQ is gonna go extremely bearish at this point. We just hit that 90 level that we talked about. That's the first, that's the second one, and there you go. It went through it. Now they're going for the 81.50. Okay. So that's the analysis on the NQ. I'll come back into it later on in a moment. They're retesting the prior swing close. No need to feel the urge or the fear of loss by not getting into the right precise moment. Yeah, it kind of hurts. I wanted to get short at the 95.75. Didn't work out. But I wanted to go for 5 points, and there you go. There's the 5 points right there. So now I have to wait a little bit for it. Okay. If you have a personal methodology or strategy that it's telling you a sell setup, it's telling you to go short. I mean, follow along your methodology, not our our way of entering. I wanted to go short at the 95.75. Didn't work out. That's my style. I wanted to go into the pullback area. I want the market to make new lows and then come back and give me a pullback entry. In the NQ, I found this is kind of the third time that I missed out the trade by waiting for that. It looks like when this guy's based on the momentum entry, once they break the no trade zone, they don't look back. So we end up missing up the trade. So I'm just saying, if you have a personal methodology that tells you when to get in, get out, and so on and so forth in terms of triggering, we're providing you the path of action. Okay? Just to make sure you understand what I just said there, we provide you the path or the directions. All right? I just want you to make sure. Please press number 5 if you understood what I just said. We're just giving you directions where the market will go. Right? It's up to you to make it even better by deploying your own methodology. If you don't have one, then you can reach us out and we can teach you our methodology, which might not be your style though. That's the reason we're taking a different approach from now on Trading Mission. We're catering a little bit more into those who are a little bit more savvy in terms of experience, that have their own style of trading, so to speak. All right, so that's the part of the NQ. Let's just go with the E-mini S&P as it is moving precisely in tandem with it. The no trade zone. Now that you know how the no trade zone works, you can see clarity of the levels before they move, right? So basically, the no trade zone on the NQ was established here between 82.75 and 74.25. Let me change this for better for us. And the first target was supposed to be 71.75. That's the first one reached. Second one is going to be 70.75, 68, and there is a clean path all the way to 50.50 and 56.75. Okay, that's what we got on the E-mini S&P. Sell setups only this morning. We just took the double bottom formation right here, and they're bouncing very strong from it. Does that mean this is going to reverse? The way we see it, I don't think so. I think it's going to continue and hit that 68 level. Let me see if there's you got 70.25. Okay, let me write that down. Okay, so that's 70.25. Thank you. So we can extend that there. Okay, and then 65.50. That's a previous transition point here. Thank you. Do we have anything in between the 58.50 and 65.50? Let me know. I haven't found anything on the lower time frame. Maybe you found something on the bigger time frame. I don't see anything. $63 flat. Thank you. Perfect. Thank you. Can you take the snapshot on this one? Hold on, let me include all the levels. There you go. Thank you. All right. So, okay. So here it is. So the E-mini S&P price structure is the exact same thing. So let's just go along with the analysis so far. So we can identify. All right. So the E-mini S&P have a long tendency, right? You can see the structure going down. Price action ABC structure same. Double or triple top, failing to take the prior high. Market tendency, it's to the downside. Price action structure, it's to the downside. And now the no trade zone based on the overnight session indicates a break below 74.25 could trigger 71.25, 70.25, right? 68, 68.50, 63, 58.50 to 57.75, 51 and 50, I mean 47.50 all the way down. All right, so no trade zone, a breakthrough below could continue all the way down, and all of these are potential outlooks for the market. If they reverse and break above the 82.75, it will trigger this potential levels up. Sounds good? So you have a full-blown analysis in terms of where the market most likely will go, and if the market comes back and stay within the 74.25 and 82.75, which is the range here, it's a highly probability of a choppy market. You will have more unbiased tendency, making it more difficult, right, to predict or trade as a whole, unless you're a scalp trader at those levels. Okay, so move down, ABC, failure on the high, market tendency going down, step one, so that's a trend. Momentum is indicating on long-term perspective and short-term perspective to focus on sell setups. That's another bearish outlook. Price action structure on the overnight session took a swing low here to the downside and just took this test right there as a potential bearish outlook. We'll see how the bounce will look. But they broke outside the no trade zone, indicating another bearish outlook. Looking for sell setups only on the E-mini S&P. Of course, anything can change on the indices at 9:30. Everybody agreed? 9:30 can change the whole thing, right? It's so important for all of us to make sure that's a possibility so we don't get surprised by the move of the market. All right, so let me, hold on. Let me double check here something that we bypassed today, which is the reports. There's none reports today. There's nothing moving the market, which makes it a little bit easier for us to assess. It's going to be pure speculation driven, so that's going to be pretty good. Okay, now that we have that, go back to 10-minute. I like to trade off a 15-minute chart and 10 minutes the least on the indices, but there you go. Actually, we can move this now here. You took the screenshot, Juan? Okay, thanks. All right, let me go talk about gold. All right, let's just talk about gold. Pretty much the exact same process though, right? The market moved huge to the downside, breaking all the prior supports that we left behind. And now there is an established no trade zone between the 1271.10 and 74.70. Remember, you move the decimal point based on the corrective decimal point of that instrument. We don't have time to do that. So basically a break above the 71.10 could trigger 81.30, 81.90, 82.40, 83.80, 84.60, 87, and so on and so forth. Okay, price action structure on gold, it's still on the long-term perspective bearish, but gold is a little bit of a different beast, right? So you can see one thing happening on gold, and all of a sudden, as you see here, it just completely reverse and take you by surprise. So those are the reasons you need to understand where the next opportunity of resistance will be, so you can get, prepare ahead of time, trail your stop accordingly, take some profits on an average in, average out, and so on and so forth. This guy's already close and crossed above that 79.90, indicating a potential bullish outlook. Price action structure, you see at the bottom side, the two arrows indicate bigger time frames and lower time frames than the 10-minute on a very specific tendency. So basically, it's just an easier way for us to monitor the 4-hour and 1-hour charts, and perhaps the maybe 2-hour charts, the long-term perspective, and the 1, 3, 5 minute on the bottom side is the other arrow. So when both of them are pointing on the upside, obviously tendencies are more applicable in that direction. Nevertheless, the problem with all this is that it's going against the main impulse move, right? So basically, what is this entitled to tell me if I see the huge price structure going south? It's probably telling me that what's going on is simply what? Anybody care to join in? It's simply a potential corrective mode, right? That's what we see. It's a highly possible correction. So if this is an impulse move, it's probably going to do a corrective mode to continue eventually down. All right, so when do you think it's going to be a full reversal then? Well, as usual, you see the double, triple top formation right there at the 89.50. Once we take those, then the full reversal of gold to the upper or bullish outlook is going to be in full effect. Up until then, this is probably only a pullback and it could die at any moment, right? Here's a level that I forgot, the prior low at 80.50. So 8 o'clock typically is the timing sequence for seeing some movement on the gold for those of you who trade it. Nevertheless, these are the zones. One, can you take, I don't have any. All right, so 67, okay, which one? 69? Okay, so this is, okay, they changed. Okay, thank you. Okay, so this is purple, bigger. This is red. 67 even? Okay, so just round it out to 69. This is on bigger time frame. Okay. Okay, so this is complete zone now. Thank you. All right. All right, cool. Let me switch then to a 15-minute and take the screenshot for everybody to use. Just keep it there. 85. Okay. You know what? Let me use this one. There you go. Perfect, man. So let's just take the snapshot, and I'm gonna use all the way up until 67. It's more than enough for now. All right, thank you. All right, so the price structure is bearish, impulse move down. The market is obviously on a pullback. You can see it on the bottom side of it. But basically we can't, it's contradicting itself. So it's not like the NQ or the E-mini S&P where we can pretty much testify today that's, you know, based on the morning, at least all the way up until before 9:30 is a bearish outlook, sell setups only. At this point on the GC, right, on the gold, it's more of a pullback. It's on bias. You got it on bias? I got it on bias. Yeah, that's what I'm saying. So no trades on the gold for this morning, guys. There's nothing that we suggest based on our readings. We're not telling you what to do or not to do. We're just giving you our points in terms of what we see. Okay? And last but not least, let's just focus on the good old crude oil. It's easier to see here that the crude oil is in a little bit of a rut, right? Since on the last, let me just count. 1, 2, 3, 4 trading sessions. In the last trading session, oil is being caught up in a range, making it way difficult to trade. Okay, So for those of you trading uh, oil, if you've been trading it for a while, right, you probably already know that it's been quite daunting and difficult to trade this market. At this point, what is the main tendency for the CL? It's unbiased. I have no trend as of up until now. Juan, if you see any changes in the big time frame, let me know. But medium and short term, it's a no trade today. Okay, good. Nevertheless, we do have a no trade zone. Okay, so let's just talk about that. So the last four, including so far today, sessions, it's unbiased. That you can scalp the market a little bit here and there on lower time frames. Absolutely, you can certainly do so if you have that ability and if you have that, way of trading. Our analysis stipulates today no trades this morning on oil until, right, the market breaks above the 37.57.37. If that happens, then it's going to test the 60, 79.93, 58.07, 58.30, 58.45, possibly 59.15. On the downside, if the market appears and close below the 56.51, there's a high probability of market reaching 35, 56.15, 56, 55.74 to 67, 36, 55.06, and 54.71. Will they reach in the same day? Absolutely not. Of course, this is applicable for immediate trading or day trading, overnight positioning trading, and swing trading. Okay, we have levels for every style of traders who typically like to buy and hold. We got scalpers, we got day traders, right? We got swing traders and position traders. So the levels are applicable for all those modalities of trading. Well, let's just take the snapshot at this point. I'm going to stick with the 60-minute because it's too narrow. Okay, so as a simple hindsight, if you're forcing yourself into a trade, shame on you. Don't do it, right? Just be thorough into your decision making, thinking about the following. As I said, the last four trading sessions, they're being cut up into a range, right? Look at this. 4 days. I'm gonna mark a point of control right in the middle. It's right here. You can see it right there at 57.05. That's the point of control. We left it right in there, right? So right in here, there is a huge amount of inconsistent tendency, right? The market breaks through it, it bursts up, and then comes back down, bursts down. You can see it right here. Upward burst, downward burst. Upward burst on the report day, downward burst. Okay? So very unstable market. Now, if we go back a little bit though, you can see the difference of how, I'm on a 60-minute chart at this point, by the way. This is a choppy market. This is a trending market. Got it? You see the difference? This is what we look for. This is what we stay away from. Yes or no? This is what we look for. This is what we stay away from. That's our suggestion, right? People like to follow it. Good. Once again, if you have a trade strategy that you can deploy, you don't give a crap about what we said about the trending versus non-trending, that's absolutely good. That's okay. As long as you have everything in place to be able to trade and capitalize on the swings, that's even better, right? So we're just pretty much in a big, huge transition. That's the way we see it. Let me go back into 120-minute chart. Let's see what that looks like. All right. Break out of the range. We'll count this as This could be the first wave. Let's see. This was an important top, bottom, ranging bound, and this was the break of that area. That's once that's the break, this could be a wave one, very awkward ABC structure down. So basically 1, 2, 3, AB kind of awkward pullback 4, push up, new highs, fake out move, fifth wave up on the report day, and now the market looks like to be in transition on a bigger correction. Would that happen? Have no idea. It looks like that's just going to happen. Let's just dissect this a little bit further. All right, in the report day that you came up, what a better reason for this guys to keep pushing further up than the report day. So why is it that they made a previous high, failed, right, and miserably, and start coming back down and close the same day on the lower part of the 25% of the move of the report day? The very next day, the market tried to push back up again, failing again miserably to take the previous high, which was the report day. The market came back down again and once again tried as hard as they could to take the prior high and fail miserably as well. The market finally dropped down, took the prior swing, obviously, of the previous day low, tested down. Overnight session today, they made an attempt to continue higher and kind of failed on the beginning stages of it. We need to see what's going on today. There's no report. It's pure speculation driven, and the market, it's completely dull, unbiased, no commitment whatsoever. So it looks like 9 o'clock today, which is the open of the oil market, will bring the steam of exactly what they most likely they will try to go for. So it's just a waiting game today. If you want to play on the CL today, this is the timing sequence that we need to wait. Then after 9 o'clock, there's going to be the 9:30, obviously, stock market opens. We're going to see how that brings. After that, we're probably going to see the 10:15 mark, right? That's another timing sequence for the CL to see the market move. We always would like to see some action into the market by 9:15, just so you know. Typically on the morning session, when we get into a trade, we want to be done by that time. If that doesn't happen, then it's obviously something wrong into the market. We'll move into the next sequencing, which is 9:30 open, see how the market works out. And we should see some clear path or momentum tendency by 10:15. If that doesn't work out, it means that it's going to be delayed for 11:15 or so in the pretty much late morning. But by this time, it's kind of overrated already. It's going to be really difficult to trade, and you should, at least on our experience, we would like to be done by 9:15, if not the latest by 10 o'clock. And we rarely do so because our experience has been every time that we do this, it's kind of we're pretty much recovering from an earlier loss or something like that. Okay, so I'm on a 120-minute chart, 2-hour overview of the market. Huge upward movement. The price action structure, based on this, it's obviously bullish. That's like what we call the duh, right? It's going up, dude. Come on. But now, looking under the rug a little bit more in detail, trying to find the details, spread it out, you can see that the last week the market has no tendency whatsoever. So that means that upward movement is questionable, right? Why they haven't made a new high? On top of it, there is a report day right there. They should have moved the market to the upside. They wanted to continue and keep that buying scenario. That's questionable as well. So that didn't happen. At this point, the market is just no tradable. We're going to be staying outside. There's nothing to do nor force ourselves into a trade, because that would be reckless trading, and I'm not part of that style of trading at this point. That doesn't mean that we can't actually put a good trade, tendency. But if I do, it would be advisable just to wait until they either break outside the ranges and or the opening of the main event, which is the 9 o'clock opening of the oil. Up until that happens, nothing else at this point matters, and I'm not feeling comfortable taking any trades whatsoever, right? So that's the analysis for today so far.